Markets breathe a sigh of relief as Trump's words ease China trade tensions. Will it last? In a dramatic turn of events, U.S. stock futures staged a robust rebound Sunday night, recovering from Friday's devastating sell-off. The catalyst? President Donald Trump's reassuring words on Truth Social, where he declared that trade relations with China will all be fine. But here's where it gets controversial. Just days earlier, Trump's threat of a massive increase of tariffs on China sent markets into a tailspin, wiping out a staggering $2 trillion in market value. So is this rebound a sign of stability or just a temporary reprieve? The numbers tell the story. By Sunday night, Dow Jones Industrial Average futures had surged by 373 points, or 0.8%. Meanwhile, S&P 500 futures and NASDAQ 100 futures climbed 1% and 1.3% respectively. These gains followed Trump's coast, which seemed to walk back his earlier aggressive stance. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment, Trump wrote. The USA wants to help China, not hurt it. But this is the part most people miss. Trump's flip-flopping on trade policy has become a recurring theme, leaving investors and analysts alike questioning the long-term reliability of his statements. Vice President Vance weighs in. But at what cost? Vice President J.D. Vance echoed Trump's conciliatory tone over the weekend, telling Fox News that the U.S. is open to negotiations if China is willing to be reasonable. However, he also warned that the U.S. holds far more cards if talks fail. While these comments may soothe jittery investors, they also underscore the high-stakes nature of the U.S.-China trade war. And this raises a thought-provoking question. Are these negotiations truly about economic fairness, or are they a geopolitical power play? We'd love to hear your thoughts in the comments. A week of losses and lingering concerns. Last week was brutal for the markets. The Dow shed 2.7%, the S&P 500 dropped 2.4%, and the NASDAQ fell 2.5%. Friday's 2.7% plunge in the S&P 500 marked its worst day since April, when Trump's initial tariff announcement sent shockwaves through the market. But it's not just trade tensions keeping investors up at night. The ongoing government shutdown is entering a critical phase, with October 15 looming as the next payroll deadline for federal workers. Many could miss their first paycheck, adding another layer of uncertainty to an already volatile situation. Earnings season, a glimmer of hope? Amid the turmoil, earnings season kicks off this week, starting with financial giants like Citigroup, Goldman Sachs, Wells Fargo, J.P. Morgan Chase, Bank of America, and Morgan Stanley. Their results, due Tuesday and Wednesday, could provide much-needed clarity or further fuel anxiety. Regional banks will also report their quarterly earnings, offering a broader picture of the financial sector's health. But will strong earnings be enough to offset macroeconomic concerns? The bigger picture, a market at a crossroads. Trump's latest Truth Social post may have calmed markets for now, but the underlying issues remain. The U.S.-China trade war, the government shutdown, and earnings season all converge this week, creating a perfect storm of potential volatility. As investors navigate these choppy waters, one thing is clear. The market's future hinges on more than just presidential tweets. It's about trust, stability, and the ability to look beyond short-term headlines. So here's our question to you. Do you think Trump's reassurances will lead to lasting market stability? Or is this just another chapter in a long-running saga? Let us know in the comments below.